debate which is going on in the policy circuits, the discussion that explores how a new green financial institution can help unlock large-scale funding for the climate transition. So many call it a game changer, and many call it maybe a duplication of efforts which SIDBI, NABARD, and many of the other banks are already doing. But obviously, you know, the Manthan will lead to Amrit as well as to some hard lessons. Right now, we are in a Atam Manthan and Antar Manthan on this topic. So, to take the conversation further, may I request Dhruba Purkayastha, he is Director CEEW, to again come back and anchor the conversation. Jagjeet, Sareen, his partner Global Climate Change, Dalberg Advisors, and also his Area Chair for Climate Initiatives at CEEW. Labanya Prakash, Jena, his Sustainability Finance Consultant at IEEFA. Laurent Gonnet, please, if you can come back, your lead financial sector specialist at World Bank. Venu, Mothkoor, a senior specialist, development economics, NITI Aayog. Shri Harsh Singhal, partner and co-founder, ProsperETE. Unfortunately, Sachin Chaturvedi had to step out because he was convened at shipping ministry. But he is always a great support, and he has already assured that he will be helping the discussion, whatever comes out of discussion at RBI, he will take it to the RBI's board. So stage is all set. Dhruba Purkayastha. Dhruba will moderate the discussion. He is director at CEEW. Jagjeet, Sareen, Harsh Singhal, Venu, Mothkoor, Laurent, Gonnet, Labanya, Prakash, Jena. So don't get scared by the big panel. There is a Atam Manthan and Antar Manthan going on this big topic. Should India have its new green financial institution? Dhruba, mic is yours. And my request is, Dhruba, that DG RBI is reaching very, sooner. So we'll have to be on time. Huh?
Yeah, very much on time. Thank you, Anlesh. Good afternoon. Possibly the last kind of session focused on a discussion on a national public green bank, but I'm not wasting time in introducing all of you. I think Anilesh has done the job, but let me start with NITI Aayog's Venu, because he has to leave and has a hard stop. So Venu, if I could just ask you, instead of me trying to introduce what this concept is about, why don't you take the mic and lay down the case that all of us will discuss? And
I think, thank you, Dhruba, and extremely, apologies primarily because I have to have a hard stop at 5 o'clock and I have to be back in NITI by 5. So I'll just put my remarks in three bullet points. Primarily, the need for the National Green Finance Institution is stemming from the fact that as India primarily undergoes this whole huge transformation in terms of transforming its economy, meeting both its developmental aspirations of being a high-income economy, as well as to be on that pathway that we will be achieving a net zero economy by 2070. What it entails in terms of the huge sectoral transitions, how does the whole sectoral transitions unravel, what kind of finance investment is required to meet those pathways. So this is some of the work that NITI has been doing for the last 1 year. There are several interministerial groups that have been constituted which predominantly are looking at developing the pathways for the country in terms of this 2070 vision. And fortunately, with this efforts, we have been joined by many of you in the working groups in terms of how does country like India think about some of these issues, especially India being a climate vulnerable country as well. So how do we bring both mitigation and adaptation dimensions, especially when it comes to thinking about these pathways? So in that context, we primarily are in a situation today that we have done extensive consultations across multiple stakeholder groups, including within the government, outside the government, with some of the think tanks, academia, industry partners. Hopefully in the coming months, some of these reports will be in the public domain in terms of how these pathways will look like, how do the sectoral transition roadmaps looks like, and what kind of investment is primarily is required. Now, in that context, when you actually see, is that many of the studies, while our numbers are still not in the public domain, project that India needs investment of the order of the scale of 10 to 18 trillion, but different studies put it in that, different buckets. Now, if you look at how much that translates into annual requirement, which is loosely around 300 billion against the current flows of 50 billion. So that's the scale of 6 times. In that context is what we started exploring. Can existing institutions strengthened or repurposed to scale that factor of 6, or do we need a new institution? So that is how this whole concept of National Green Finance Institution has been thought about in that particular context. And the second important context is primarily is that most of the capital that is flowing in from the global north is predominantly for India has been minuscule. How do we scale such capital, especially from the global north, to come to India and also to come at an attractive rate so that our industries will start to benefit from the concessionality or from the risk mitigation or from the hedging or variety of those structures. So that's the second point that I want to make. And the third important point that I want to make is about the cost of capital, right, which is embedded again in the second argument, is that now if you look at what has happened across many of these NBFCs, especially PFCs, IREDAs, SIDBs, the cost of capital in the last 5 years has not changed much. So if the cost of capital has not changed much, how do we then, bridge that particular gap, especially when we talk about some of the technologies which are still not in the money, right? So can existing institutions in that sense be repurposed to fill that gap? Can they attract global capital at scale, if possible, some kind of concessionality embedded? Or there's a need for a new institution? Or in a sense, how do we then think about a structure which can reduce the cost of capital? I think this is the whole structure of the argument where in NITI we have started debating, and some of the partners that we here in the room are also been part of some of these discussions. And we are exploring in terms of how this structure will probably unravel. At this juncture, we are not particularly binded to saying that existing institutions can do the job or not do the job. So I think that's that's the brainstorming session that I think we are having it today. Thank you, Dhruba. Over to you.
Thank you, Venu. Feel free to. Thanks for the great introduction, and really part of doing the case that you outlined the rationale from the need, possibly directed towards whether existing institutions can fill, but actually throughout the day these issues did come up. Let me now turn to current World Banker Laurent on the subject first. And the question for you, Laurent, before I turn to ex-World Bankers and ex-IFC also present, so that makes the circle quite complete, at least on multilateral development institutions, without counting myself for now. But coming back to Laurent here is the case. Here's the thing, let me put it this way. Okay, so does a public green institution, bank is a loose word and need not be a bank, public financial institution, does this ability of a country like India or even a Brazil, or does this go along with your thinking on saying, can this institution, aided by multilateral institutions, ADB, World Bank, MEGA, can it reduce the cost of finance for India, ceteris paribus, with nothing else changing? Does this work? Because green, irrespective of how we look at, it's quite dependent on the cost of money, quite significantly dependent. Does this work as an intervention?
Okay. um, I think anywhere there is a market failure, there is a need for a public institution. That's very clear to us. So we can support public financial institutions. We have done it in India recently because we have been pushing for NAPFID. That's a good example. But of course, there were conditions to us. We cannot engage in a public institution with wrong governance arrangements or not clear mandate, etc. So we will of course look at the future institutions, these future institutions under the lens of these corporate governance, mandate, risk management, etc., and also positioning. What pose questions to us is if we create a new institution in India, how this new institution will articulate with the others. We heard about CEEW. CEEW is doing good things on green finance for MSMEs. What I guess NABARD is doing also is its share, even if it's small, on agriculture. NAPFID tomorrow will do resilient infrastructure. So we have these DFIs already that have started acting on the green in the green space. So the articulation of this new financial institution will be looked at very carefully. My own sense is that there is space, of course, but the positioning of this new institution should be maybe more upstream, meaning that nobody is taking care of the sectors, the projects that are untouched because they are very risky. So we call them the frontier markets, where commerciality is not there, and nobody is interested in these ones. So that could probably a role for this new institution to play. Whether the World Bank is going to finance it, yes, definitely, through budget support. For example, we cannot invest directly as a shareholder because we are not shareholder, but we can provide the funding to the government so the government can become the shareholder. And plus, later on, we can partner with lines of credits, credit enhancement, counter guarantees, etc. We have the whole gamut of support, including IFC, in case there is a partnership with private institutions, and MIGA, in case foreign investors would like to contribute in a way or another. So yes, we can do it, but we are not cheap. I mean, we are no longer cheap, unfortunately. That's why it's more difficult for us to finance India. Thank you.
Thanks. Great to kind of hear this in-principle support. Let me turn to IFC, ex-IFC. Harsh, with your experience now with this institution, assumably hypothetically in place, how does this leverage private finance, or even IFC for that matter, come in? Because at the end of the day, you need public finance to crowd in private finance, and that's where we have the complementarity of this amplification coming into play. Over to you, Harsh.
Thanks. Thanks, Dhruba, for having me. I think it's great to hear very good thoughts around very important topic of attracting more capital for climate. Now, I think, my simple point on this is it's actually not a question of cost of capital right now. It's actually a question of how to finance, right? None of us actually know many of the businesses which are emerging, that how to finance them. I think whenever we talk of climate, a lot of discussions always vary towards energy, but the reality is climate is getting into every sphere of the economy, right? Whether it is what we eat, what we wear, how we move, and everything, how we produce, right? So everything is changing. So therefore, what is actually required is the underwriting models itself need to be rewritten, right? And that's where I personally feel that an existing institution may serve a limited purpose. You really will need to have a very agile institution created for that. And in fact, I would rather go to the extent of saying, can an institution serve a purpose, or you need multiple institutions, right? So that is another point of view which I would have. And the substantive data around it is, we should look at how did we create infrastructure boom in the country, right? Now, when the reason we have been able to get where we are, although I mean, all of us agree that a lot needs to be done in infrastructure, but whatever has happened is because in 1990s we created two institutions called ICICI and IDBI. Then IDFC was created where IFC was one of the founding shareholders. So a lot of these institutions have been, what has happened is these institutions have essentially played the role of creating talent in the industry. They have played the role of creating markets, to your point, in terms of mobilizing more capital. And now if you think about it, green is a bigger transition for the economy. So therefore, you would need even more, probably more than 3 or 4 institutions to actually create the amount of capital do we need. The last point I would make, on this capital coming from global north, I think the context around the world has changed significantly, right? I don't think we can actually think of having the same amount of capital which was coming for climate. Probably, I mean, sorry to sound a dooms person, but probably it will go down substantially because US is where it is, and Europe, we know the priorities are changing. So essentially, we will have to fend for ourselves. The way it will work is that we'll have to be innovative. We'll need to, underwrite, as I said, that, create new models. I mean, one example is how we created the solar blending. That was a simple innovation which happened in India. If we would have looked at traditional models, nothing of that sort would have happened. Sorry.
No, thank you, Harsha. Turning to Labanya before I come to Jagjeet. And Labanya, you've been working through this from various hats that you have been working in the course of this working groups from CPI, CEEW, IEEFA. Now, what is the gap? What is the size, and what's your view of saying not being able to be met with the existing institutions? That's an argument which is coming about here. So the gap versus not being able to meet the gap with existing institutions. Yeah, can you throw some light?
Yeah, so if we see the number actually coming from CEEW or even from NITI Aayog also, so in the next 5 years or 10 years, we need around close to more than $100 billion of capital. And as per CPI study, we are mobilizing only 50 billion or so. The point is that if we see that gross power loan in a year of entire banking system was only $10 billion in 2023. So if I include 4 largest public finance institutions, including PFC, IREDA, REC, as well as NAFID, the total gross loan amount in a year is only $28 billion. Here we are talking about, this is the amount currently coming from large financial institutions as well as commercial banks. Then if we see the number, we need debt financing close to $120, $130 billion per annum. It means that our existing financial system doesn't have enough capital. We keep on saying that enough capital is available, but if I see that in a $4 trillion economy, we have a 30% saving rate, and if we see that financial intermediation of that saving rate is not that high. In addition to that, if I say that retained earnings of corporation is also very, very high, particularly nowadays, okay? It means that these existing institutions are not able to do. For example, even if they want to do, here we are talking about the institutions which can provide risky capital, the institutions which can provide concessional capital. Okay, it means that those institutions will be perceived as risky financial institutions. Does any of the NBFCs would be interested or would be willing to sacrifice its credit rating? So that's a question mark. We are talking about you create an institution which can crowd in private capital. Instead of fighting with existing financial institutions, taking the risk, a risk in the form of providing growth equity, risk in the form of providing FX hedging facility. It means that existing institutions, they may lose their credit rating. And many of them are publicly listed company. It means that their primary responsibilities nowadays is to create wealth for the shareholders. So it will be very difficult for these kind of institutions to provide the kind of capital required for net zero technologies. It means that we need a public financial institution which can provide that. The second point is that although there are many other public financial institutions, they have certain priorities. We cannot ask SIDBI to become only green. We cannot ask NAFID to be only green because they have their own priorities. Priority may be small and medium-sized companies, maybe infrastructure sector, which also required for the development of the country. So we cannot say that, okay, you become a green bank tomorrow. That may not be a possibility. Third thing is that we are talking about raising capital from outside the country. Mr. Sinha said that the biggest hurdle is that the 400, 500 basis points when we try to import capital from outside the country to our country. It means that some institutions which can provide, there is a possibility, I'm not saying there is a definite thing. if we are able to raise capital from investors which are green leaning in nature, not necessarily they would give a green premium. When you are talking about green leaning, there is a possibility that we may be able to raise capital at a concessional rate. And here you are talking about a pure green finance institution. There is a possibility to raise capital at a concessional rate. In addition to that, being a green institution, there is a lot of political goodwill we can earn across the world as well. Several countries have already established, okay, they are providing growth equity, they are providing equity, credit enhancement. Although most of the developing countries, you don't need FX hedging facility, but we need this country. It means that can these existing institutions can provide? I'm not sure about that. So that's the point why we are discussing that, okay, a new institution can solve the purpose.
Thank you, Lavanya. Turning to you, Jagjeet, herein comes the question. It seems and it appears and it looks like that there is in principle tacit sort of need which is being felt. There's an institutional gap which is coming about. In fact, it's not only today's forum, it was in a forum about a couple of days ago, where also this need. So therefore, now coming to you, before I get to exactly the question, I want to add a couple of prompts, and that prompts are, if you look at India's economic or financial intermediation history, whenever India faces a constraint of saying there is a sector at which banks do not put in money, and rightly so, whatever. By the way, green bank actually is a misnomer. For India, it's a green financial institution, a banking element of a short term that will lead to asset liability mismatches. Let's cut the bank word out from. It is a financial institution, public financial institution. So you build a SIDBI for small industries. You get a NABARD from where agriculture loans have to be handled. Then you come back, you had earlier converted all the ICICIs, IDBIs, all of this into commercial banks. They became commercial banks. Is the need felt? And one, the need therefore is felt for a development bank. Now, feeling this need for a green, what is the form structure that it should possibly take in terms of 1, ownership, 2, management, 3, capitalization? Your views.
Thanks, Dhruba, and thanks for pulling me into this working group and this set of institutions who are trying to make a case for this. You know, I'd be very honest, this conversation is bringing me a deep sense of deja vu. I was part of design of 2 climate finance institutions. One was climate investment funds at the bank, now about 18 billion, and green climate fund. In both cases, the conversation was exactly the same. Of course, we need more. The existing institutions can do more. Give them the mandate. Why do you need to create new one? Why you want to create new one? We don't want to create new institution for every problem we face. World Bank said, we can do everything. We are the mothership. Why do we need others? Then donors said, no, every bank has to go green. We have to create a big trust fund which will green you, which will green others. So we created climate investment funds, which was providing all kind of concessional capital to all MDBs. Then problem became bigger. Everybody realized we need hundreds of billions of dollars. So said, okay, now we have to green every institution. We have to create green climate fund, which would be the mothership of all green institutions, $100 billion. It didn't reach there. It is about $18 billion, but now they are greening national institution, regional institutions, some of the multilateral. Again, we created a bureaucracy. Everybody hates it, but there is this big institution which we all created. At a country level, friends like Paul Bodner, US Strategy, and others have been pushing every country should have a national green bank. Of course, is there a need? Yes. Do we need new institution to fill that need? Jury is 50-50. I think the question to be asked is, form should follow functions. Let's first settle the functions. And is there enough demand, visible demand in the pipeline and strong interest coming from industry? Here we are more or less, now think tankers, public finance institutions. Let's get private sector people in who are actually would be taking this money. And that's where I would put the plug of this clean tech manufacturing mission. So we all helped launch it through the budget process. Government of India seems very serious to push for indigenization of clean tech supply chains. If you take 50% as a target for the 6 sectors they have included in the mission, solar, wind, battery storage, EV, hydrogen, and HVDC lines, you need minimum $50 billion of additional capital to be deployed on ground in the next 5 years. I'm just talking about 5 years. Current system cannot provide that kind of a risk-bearing, long tenure, cheaper capital. Can this institution come in and fill that gap? To my mind, it should. So I think what I'm suggesting here is let's try to figure out a big demand piece and get endorsements from private sector players who will benefit from them. And then I think you will find political champions. I think we are in this echo chamber where we all are agreeing. On margin, we are differing. But I think we need the demand for this and a political champion who would put a stake forward and say, we will get it done. Because, of course, everybody agrees we need more money.
Thanks, Jagjeet. But I have 7 minutes here, but I'll play the devil's advocate for, I should say, for creating a difference on something which is appearing to be kind of unanimous, but let's turn it around. Let's turn it around. It's not that we don't get those arguments. We get those arguments very clearly that money is there, projects are not there. Money is there, bankable projects are not there. Now, this is a catch-22, which at least I face it everywhere in terms of, and I often use it as an argument. On the other side, the point is there is a reality here, there's a half-truth here. And I want all of you to respond to this issue of will supply of money or availability of money make projects green transition happen, or are the finance side going to look for such demand to be created, and how do you make these two sides work together? It's a loop, which is like one depends on the other and the other depends on A. So we are never going to unloop it or get out of it in thinking levels too. So this needs to get solved. All of you, please, starting with Jagjeet.
Let me quickly begin. See, in climate space mitigation, you start from solar or even wind and solar, now hydrogen and EV. Government has created the demand through various instruments, whether it's PLI, incentive, this, that, tax break, lower GST, whatever. They are bringing incentives to drive the demand or create the demand, and private sector responding. In this world where everybody now loves industrial policy, whether it's EU, whether it's United States, whether it's India, China has been doing it for 2 decades now, I think government can create that demand. What I'm saying here is you need endorsement from the private sector that they see this as a reality in the near term. I think if we can't sell in 10 years, this will happen. I think that story will not find a buyer in the political realm. What I'm thinking, get 10 CEOs for all these sectors, and if they say yes, if there is such a money available through such kind of intermediation, we'll move forward. I think we will have a much faster case than just giving headline numbers. We need trillions, they are not available. Everybody agrees, but this discussion will not move forward.
No, I think Jagjeet makes a very good point that, in terms of contextualizing the demand, and I think I would drill a little deeper in terms of the nature of the capital which is also required, right? I mean, so let me take you the example of what we do, right, and what we are trying to build here. Basically, if you talk to the climate entrepreneurs who are trying to create newer solutions, all of them say, if I want to raise $1 million, $2 million seed, Series A capital, despite the funding winter, I get that capital. The problem starts when I want to raise 5, 10, 15, $20 million of capital. And that's where there is absolutely nothing happening in the country. There are hardly funds which are actually operating in that space who are willing to provide that risk capital to those companies. And that's where the gap is. Now, the reason that is also not happening is at the back, there are not people who are willing to take risk. Laurent made a point in the previous panel about being able to blend risk capital for climate industries. Unfortunately, Indian regulations don't allow that also. We have been working with SEBI now for 2 years, and still, they've come out with the in-principle approval, but the draft of the regulation has also not come out. So these are the real challenges, actually. And, that's what I meant when I said, at least, that there is this real need for someone to actually understand that some of the traditional underwriting we have been used to, we can't use it. That's point number one. Point number two, in terms of prioritization, as we take this along, I think we have to focus a lot more on the equity side of it. The third thing I would say is what will be required is market making, right? Market making in the sense, this institution itself will not be able to, fund everything. You will need to create funds. You will need to create institutions, provide lines of credit like, GCF is
refinance,
doing, right?
Just coming
That's
in
the point.
refinance.
No, the point, refinance, when you say it comes with a debt mindset. So that's the only thing.
It's a debt mindset. Yeah, sure.
So I'll pause here. I just want to make sure Laurent.
Laurent. Yeah. How do you break the cycle? This is a perception cycle. Bankable projects, nothing, it's really, lack of bankable projects is something going on for decades. I heard that in the bank at the time 15 years ago. So no bankable projects, therefore no money. No money, therefore there are no bankable projects. Yeah.
But this is exactly what I was saying. This institution, this green public financial institution, should work primarily on the incubation, at the stage of incubation. There are so many projects that needs to be looked at, and someone has to take some additional risks to nurture these projects and bring them to maturity, and then the market will take over, not the traditional market. So I see a role for the new financial institution on this one. Then after, we can use the co-lending I was mentioning earlier, the new co-lending guidelines that will be issued by the central bank soon. And I think it's a great potential for this DFI, this future DFI, to bring in the commercial banks and NBFCs to get them used to these new markets. And they are requesting it. They are asking for that. They are asking for new co-lending and clarification on the co-lending. This is coming. And at the end of the spectrum, I see another role for this DFI. In India, there is a lot of money which is unused in the capital market. These domestic financial institutional investors, pension funds, insurance companies, they are investing massively in AA and above bonds. Why don't we think about some PSL, priority sector lending, but adapt it for domestic institutional investors? Let's say we can start small, like 5% of their portfolio under management should go to green something. Right. Maybe 5 is too much, also because we are lacking the taxonomy. But let's assume that we have the taxonomy tomorrow. Then imagine what could a PSL for domestic institutional investor would do. That would solve the demand and the supply, in my view.
Nisha, there are some shares which the regulators of insurance and pension are trying to direct, but yeah, that's a good point taken, and that may. Labanya, last word on this session.
Very
40
quickly,
seconds.
Sometimes we feel that finance cannot change the real economy. So I have a different point of view because, for example, the real estate sector, be it United States or be it India, even the telecommunication sector, a massive amount of pumping up money have made these projects, many projects, which were earlier not bankable, not financiable at the initial years. I'm not talking about securitization issues in 2008 crisis, but that makes possible that some of the projects which were not earlier bankable became bankable. Here I'm talking about the usage of public finance. The second of the NGFI, I'm talking about the NGFI is not going to compete with any of the financial institutions as a lender or so. Then it is a problem. Because many times when the lender starts at the development financial institutions, they will become risk averse in nature. So in that case, can you create NGFI which would always be willing to take risk? And like he said that, okay, you can create a market. Maybe possibly there is somebody was discussing about securitizing green loans also, securitizing individual projects. Here, NGFI kind of institutions can create market, demonstrate profitability, maybe possibly take it to the capital market.
Thank you, Labanya. Great point. Finance can lead, does not necessarily need to follow the real sector. Yeah, okay. That was a good one. Thank you all. I think we're on time. Anilesh, I've stuck to it. 15 seconds over time. But I guess. Thank you all. Bye.
Thank you, Dhruba. Thank you very much. May I request Neha Kumar if you can come now and help us in paying our gratitudes. This way. So we all can have a group photo. We can pay gratitude later on. Sorry about this.
We got our points before. We are all right.
Thank you, thank you. So Raman, we are all set.